And so to the Managing Director of the IMF, Kristalina Georgieva, who joined me earlier, and we were talking about the top concerns of higher oil prices and economic disturbance as a result of war. The IMF has already warned when it comes to the United States, the prospect of lower interest rates may have to be on hold for a while as inflation remains stubbornly high. And that was something I discussed with the IMF's MD.
Let's first start by saying thank you, US, for having a strong economy. Because when the US is strong, that lifts up the world. And then let's say to the US, please look at ways in which you may be able to bring inflation down. We know that consumer spending is strong. We don't want it to weaken. Perhaps there could be some fiscal restraint in the US to bring that pressure on prices down.
Not in an election year. There won't be fiscal restraint in an election year.
This is why I said perhaps. But, still there can be calibration of spending in a way that meets the interests on the political side and also helps on the economic side.
You're basically saying to the US, don't cut rates just yet.
What we have seen is that the economy is very robust, but that means that prices are stubbornly staying higher than the Fed's target.
So we're back to a unipolar world, in a sense, where it's the US economy that's doing the hard work of dragging everybody else along. China is not yet playing its role.
Well, China is contributing 1/3 of global growth, and China in the first quarter surprised on the upside. The problem with China is that they are facing a fundamental choice. Do they continue with the policies of the past that served them well then, but may not serve them well now? Or they finally take this turn towards more demand domestically and more domestic consumption? Our advice to China is please take the turn for your own good and also because it would be a good news for the world economy.
Geopolitically, things are getting worse. The war in Gaza, the war in Ukraine, but unless the US does start supplying arms to Ukraine again, this thing is going to be bloody and horrible and over.
Ukraine has earned every penny of support they have received. Their economy is performing responsibly. Growth is 5.3%, inflation 3.2%. I mean, just think about all these countries that are not in a war and don't have this performance. And they take very seriously the functioning of the economy. We have just completed an assessment and it is very positive. Obviously, they need support from both sides. They need the financial support for the economy, and they also need the ability to stand firm in this unjust war.
In the Middle East, the events of Iran over last weekend and the prospect of what comes next, what's your biggest concern besides, obviously, further war?
Biggest concern is people that would suffer unnecessarily. Of course, on the economic front, oil prices. Whenever something goes wrong in the Middle East, oil prices go up. When oil prices go up in a world that is praying for inflation to go away, that's really bad news.
And we're not there yet, but we're teetering on the edge of that, aren't we?
We saw on Friday when the news about potential strike came, oil prices went up 1%. Just on that news. So we are in a very uncertain time, Richard. Adding to uncertainty is like throwing gasoline on fire. So I pray for wisdom and an ability to restrain actions that can disturb this precarious status of the world economy.
So there is good news and there is bad news.
Yes.
Not about you. The good news is that you have essentially been reappointed for a further 5 years. The bad news is you and I will be talking every couple of months for the next 5 years.
I think this is great news.
She says that now.
Very much look forward to you drilling answers from me, Richard.